We are starting to see a shift in Calgary's housing market. Inventory has been rising, prices staying fairly stable right now, and adjusting accordingly in some unique areas of the city. But overall, the market, it is really starting to get more in that balanced place, which is really where we all want it to be. The real story here, it is playing out just as was predicted in the 2026 forecast from Krebs, and in my video that I released recently as well, I went over that and gave my own opinion on it, and that is also kind of playing out right now, and I'm definitely seeing that on the detached home side. Today, we're going to go over what's happening with the sales in this early spring market, where the prices are moving to, and what inventory levels are really telling us about what the market and what we can expect this spring. Now, detached homes are still tight. Apartments are continuing to see that oversupply that we were talking about. So let's break down exactly what's happening in the Calgary real estate market from these February stats. Hey, I'm Ryan LeBlanc. I'm a realtor here in the Calgary area, and I help families plan for their next move or investment in real estate with a focus on practical strategies and always on smart financial decisions. Now let's start with the big picture. Here's the overall market snapshot. In February, Calgary recorded 1,526 home sales. That is down 11% compared to last year. But at the same time, we also saw 2,700 new listings come on the market. So we are very much leaning towards more of a balanced supply when we are starting to. We've been building this inventory over the past 6 months, really. And now we're seeing the sales really start to capture some of that inventory. Even though we're seeing more listings coming on than we are sales, it is a good place to be. And it means we got a healthy, balanced market up ahead. We always have to look at maybe the broader spectrum of the last 10 years and what the market average is, the 10-year average. I like to look at those sometimes as well because that shows what the trend is overall rather than just what it has been when we're comparing to what the high water mark was, say, in 2023 or 2024. As I always say, one of the most important indicators is your months of supply. Now, this is the number that tells us whether or not we're in a balanced market or a buyers or a sellers. That helps us to plan the strategy that we're going to use to either sell a property and how we're pricing it, or if you're buying something, you want to know what the market is, where the market's going to go next month or the month after, right? If it's in an early stage of the spring when the market is increasing, maybe we have low months of inventory, and that perfect property comes up and there's maybe 2, 3 other bids on it, you know that the market is going to be going in a direction that's going to support maybe a higher price of it. If on the flip side we have high inventory, which is kind of the scenario right now, and you're putting an offer on a property, if you've got 3, 4, 5, 6 other properties that kind of could suit you as well, you don't want to overpay for it. And that's exactly what we are seeing a lot in the market right now. I'll touch on that in a second here. So Calgary is sitting at 3.16 months of inventory. So just over 3 months. That is fairly in the balanced territory right now. But again, that does include the entire city and all property types. So when we have the oversupply of apartments versus the more balanced approach of the detached homes, that's what we're going to see when we pile all these numbers together. It doesn't really translate to what we're really seeing. Now, for some context here, 2 months of supply, that is a strong seller's market. Moving into 3 to 4 months of supply, now we're in that balanced territory. And over 5 months, that would be a buyer's market, very favorable, lots of choice. So what we're seeing right now really is a market that is quite balanced in most property types. Now let's talk about prices. The benchmark price for all residential properties in Calgary right now, sitting at $560,500. That is about 4.4% lower than it was last year at this time. But again, this varies quite a bit depending on the property type, right? So let's break that down. Detached homes, overall, this is across the city. Detached homes, $734,000, down about 3.2% year over year. Semi-detached homes, they are $682,000, essentially flat over the year, hasn't really moved. Row homes were $423,000. That one's going to be down about 5%. Apartments, $298,000, and they are down 9% over the year. obviously the biggest difference right now is going to be between the detached homes and the apartments. Your detached homes still relatively tight supply throughout a lot of areas. It really means that buyers, they still face some competition in this segment. I've seen this a lot in some of the markets in the areas that the communities that I work in a lot. When you have something particularly under the 600,000 mark, there's some really high interest, especially some really popular communities. When a property is listed right and it presents really well, we are seeing 2, 3 offers coming in. But the difference is, and this is the real asterisk to the difference between our market now, when we see multiple offers, and what we have experienced if anybody was in the buying market or the selling market a few years ago. We're not seeing the prices get bid up, because at the end of the day, there might be a few people interested enough to write offers on a property, uh, but unless it's some really unique gem or it's way underpriced for what the fair market value is, you're not going to see the price get bid up too high, because as soon as a buyer reaches a limit of what a fair market value is, well, they're not willing to overpay, because there's probably 3 or 4 other homes that are going to match that same criteria. They don't have to overpay, right? 2022, 2023, I mean, even 2024, there was not that much inventory. So if you needed a house, if you wanted that house, there was very few options other than just paying more for it, trying to win that bid on the house, right? But apartment condos, now that is a very different story. The inventory has increased significantly over the last year, and it continues to do that right now. We've got a lot of new construction still yet to come online. Should be coming online throughout the earlier part of the year and in through the summer, I believe. Um, you know, it's increased significantly, and it's really had a negative effect, a downward effect on the amount of sales, because people are not wanting to buy a product that is going down in value. And of course, a lot of sellers are wanting to get what they feel the market is telling them that it's worth. But if you're reading the numbers and you're understanding the data, you know that the market is not going to support a higher price on an apartment. And it's going to support it even less in 3 months' time, in 6 months' time, when we have even more inventory coming on. So it is a really difficult scenario right now with the oversupply conditions that the apartments are seeing. Um, that's why we're seeing the biggest price adjustments happening right now is in that segment. Like I said, we are down 9% on year over year on these, and I expect it to soften up a little bit more as the year goes on. If you're a buyer right now, there are definitely some options. With inventory rising and the sales slowing, you may see more listings to choose from, get slightly longer days on the market, so you have some time on your side to make those decisions. But of course, if you're looking for a detached home in a popular community, the competition is still there and it is strong. Just understanding the numbers so that you don't overpay, because you don't have to right now. Now, for sellers, the market is still pretty healthy. It's a healthy market to be selling in. That's what is great about a balanced market, because when a property is presented well, marketed well, and priced right, it's going to have a really good positive reaction to it. It's going to have demand, and we're going to get offers on it, right? But the homes, generally speaking, they're taking a little bit longer to sell. So if you're pricing your home and you're pushing it on the upper range of what's fair, it might take a little bit longer. Average days on market right now is increased compared to last year. So average right now, we're at 42 days for a sale right now. Compared to last year, we're sitting at 33 days in order to sell. So as we move into the spring market, which is really well underway at this point, there's a few things that I'm really watching for. Number one is going to be whether the inventory is going to continue to rise. So if we're going to still see good, healthy numbers of new listings coming on the market, that is going to far outpace the sales that we're seeing, it's going to be pushing the inventory up. That's going to bring prices down a little bit. On the flip side, you know what? If the inventory does start to slow up a little bit and sales are continuing at the pace that they're at, I do think that we're going to see the price reflected in that, and we will see a little bit of an increase in the next couple of months, but it's going to be very modest. The next thing I want to watch is your detached and your semi-detached, particularly under the $600,000 mark. It's a very hot market right now. particularly in some of the more favorable communities. I am seeing really quick offers that are coming in on some properties and even going into multiple offers. But there's a really big difference now between a multiple offer scenario right now in this market versus what we have seen in few years past, right? In 2022, 23, 24, though the market, sorry, the multiple offer scenarios that we're seeing right now is about the interest that the property has, but we're not really seeing the buyers overbid on a property just to get it, because there's going to be a few other properties that might be on their list as well, and they're not willing to overpay on one property, overpay on market value, that is, overpay on one property when they could just as well move on and pursue the next house, right? If this starts to be more of a trend where we're seeing buyers losing out on offer after offer, that's when we might start seeing them increase their bids, because now they're getting that sense of desperation a little bit that they want the house. We're going to see that. So if our inventory is starting to pull back a little bit, we might start seeing some of these multiple offer scenarios come up more often and the bids get pushed a little bit higher. That's going to then translate to more of an increase in overall price. The spring is usually when Calgary sees our biggest surge in activity. So the next few months is really going to tell us a lot about where the market is heading this year. Now, even though inventory levels did reach nearly 5,000 units in the month of February, the vast majority of them were condos and row homes. Those made up more than half of the total inventory. And if we take a look here, is how the benchmark price, the overall benchmark price, breaks down throughout the city for February. We've got as much as 706,000 in the West End. They'd be the highest, and they're pretty flat year over year, so they've really held their value well. Contrast that over to the Northeast and say the East, where we're sitting at 471 and 402 respectively. But they've seen the biggest declines, 8.6% down in the Northeast and 7.5% down in the East End of the city. This really does reflect what we saw in 2022, 2023, 2024, where the Northeast and the East End, and to some degree the North End, really saw a huge surge in their prices. They were, in some cases, they were seeing double-digit increases, up to 18, 20% increases year over year. Massive increases in the benchmark price. And it was almost a little bit of a bubble that was forming, because they were just viewed as the only real affordable option for a lot of folks, investors or first-time buyers, or people just looking for that lower price property to buy. Everything was flocking to the Northeast, the East, and the North End to be able to get those numbers, and it just drove the prices way up. So what we're seeing now is really just a pullback of those prices back to a more reasonable level, these numbers are just reflecting that. If you're thinking of buying or selling this year, understanding the numbers behind the market is going to make a huge difference in the strategy that you choose. If you have questions about the specific situation that you're in, feel free to reach out. I would love to chat with you. And if you want more updates just like this on the Calgary market, make sure you subscribe. Thanks for watching.